Escrow is the process of having a neutral third party take possession of cash or other assets when two or more other parties are conducting business. Escrow plays a pivotal role in the real estate market because without the escrow process, you might have a buyer with cash and a seller with a deed, and the buyer says, "Seller, give me the deed and then I'll give you my cash." And the seller would say, "No, give me your cash and then I'll give you the deed." So what happens instead is the parties involved will open an escrow account, and the escrow agency will take possession of, in this case, the buyer's funds, often the lender's funds, and the seller's deed. Each party also will submit typically a purchase and sale contract that contains written instructions to the escrow agency detailing what conditions need to be met in order for the escrow agency to release those funds or assets to the appropriate parties. Once all of those conditions have been met, then the escrow company will give the deed to the buyer and give the funds to the seller. Now, this is just an overview of the escrow process. In another video, I detail each of the steps individually so that you can understand how they work chronologically and what conditions need to be satisfied during the escrow process in order to close the deal. If you like this video, please subscribe and check out my next video highlighting the steps in the escrow process. Or if you really want to take your skills to the next level, check out my online masterclasses in real estate, finance, and investments at www.evergreen.courses.